Hi, my name is Morgan Mullis, and my presentation is on accounting fraud. What is accounting fraud? The business definition for accounting fraud is the intentional misrepresentation or alteration of accounting records regarding sales, revenues, and other things. Why is this topic so interesting? Accounting fraud can happen every day in all sorts of businesses. Small discoveries and minute changes in numbers that don't add up can lead to huge findings and can make huge companies go under. And there's so many different motives that can cause different companies and businesses to commit accounting fraud. What is accounting fraud continued? Some examples include embezzlement, stealing money, misappropriating, and altering data. The relevance to class is accounting fraud deals with many of the different laws that we've learned about in class and deals with some of the cases that we've looked at. Some types of accounting fraud include invoice fraud, which duplicates invoices, issuing them in the names of real customers that they actually have, even though they don't actually have the invoices. Accounts payable fraud creates fake companies to make payments for goods. So if they don't have the money to pay for those goods, they'll create fake companies to make those payments even though that money still isn't coming in. Accounts receivable fraud, one or more employees diverts money into their own accounts, and that's just for greed and personal gain. Financial statement fraud is to portray a failing company as profitable. Lots of companies do this because if they're not making money, then it'll drive their business away, or what business they have away. So this can help them look profitable when they're not making any money at all. Tax fraud, directors misrepresent financial facts to hide profit so they can get tax breaks. Trending accounting fraud issues. There was a Tesco scandal in 2015 where there was shortfalls in data, and that created just a big black hole in their accounting records. And this deals with deals that were booked early, and when they were booked early, they didn't have the money, but they went ahead and put that money into their account records. So they didn't have that money, because they were booked early, but they still put the money that they would make in the future in their books. And the other thing is Dell was the computer company was fined $100 million. They had charges of accounting fraud. They lied to investors and used fraudulent accounting methods. So they had a big fine. The Enron scandal. This is one of the biggest scandals in the history of businesses. The scheme was developed through special purpose entities, which was developed by Andrew Fastow. They could hide assets that were losing money in the special purpose entities. This would compensate for the losses that they had by giving common stock to the special purpose entities. An investigation come upon Enron and the special purpose entities, and as soon as that happened, Fastow was fired that exact day. And if you look to your right, the picture is of Andy Fastow, who was the chief financial officer at Enron. Enron reinstated earnings going back to 1997. They had losses of $591 million and a debt of around $628 million by the end of 2000. So they were really, really far in debt, and throughout all of this, the company remained a great image in the stock market and in the world about being one of the best companies and one of the most profitable companies in the market. The final blow to Enron was Dynegy backed out of his offer to merge with Enron, and that was kind of like its last hope to make some more money. And then by December 2nd, Enron filed for bankruptcy. Lasting effects. There were many different organizations created to stop big accounting fraud scandals from happening like this again. And the Sarbanes-Oxley Act of 2002, that tightened disclosure and increased penalties for financial manipulation. The Financial Accounting Standards Board, that raised levels of ethical conduct. So it just made it to where businesses had to cooperate more with accounting records. And the board of directors became more independent and monitoring audit companies because one of the companies that was helping Enron audit their accounting stuff uh, went almost bankrupt too because they lost a bunch of business because they were caught helping Enron commit these accounting fraud acts. And the board of directors also uh, started quickly replacing bad managers because they don't want any big scandals like this ever happening again. And if you look to the right, there's another image of a Enron employee, and this is Jeffrey Skilling, who's the CEO of Enron, and he played a huge role in this scandal. The analysis of the fall of Enron. So there was many different things that led to the downfall of Enron. Just three of them is fraud, of course, and greed and arrogance. All of those just led to the downfall of this huge company that could have been great and up and running today. Enron is founded in 1985, and at the end of 2001, its financial condition sustained only by accounting fraud. So if they didn't have accounting fraud, who knows what their financial status would have been. Arthur Anderson, which was their auditors, helped commit these accounting fraud acts. And like I said, Arthur Anderson lost a lot of business because they got a bad rap for helping Enron do all these illegal things. And January 10th, 2002, Anderson shredded all their documents related to Enron. And like I said, it caused clients to lose trust, leave, and market prices to fall for Anderson. And it's just completely wiped out their reputation they have. Enron also used mark-to-market technique. And it's mark-to-market is when long-term contracts are signed, and the profit that they will get, in theory, is already marked down in the books. So even though it hasn't been made yet, they still can put that money down in their books. So technically they will get that money sometime, but when they put it down in the books, they don't have that money at that time. This whole scandal was basically just a huge Ponzi scheme. They used it to cover up debt, sustain falsely high stocks, investment grade crediting, and self-enrichment. The CEOs and Andy Fastow and Ken Lay, they all got crazy rich off of this scandal because they used accounting fraud to help their stock price stay up. So they themselves bought stocks in their own company and encouraged everyone else to buy stocks, even though their company wasn't producing as much profit as they said they were. It just looked like they did, so people kept buying stocks and they kept making money. And this whole thing just deceived investors and the public and helped Enron stay up and running when they probably shouldn't have been. And it just caused millions of people to lose so much money by investing in this company, and helped the manipulative CEOs and big major people in this company to get crazy rich. Conclusion: Enron used accounting fraud in many different ways. As you can see, they put money in the books that they didn't already have, and used special purpose entities to help pay off money that they didn't have, and it just made this company look like nothing could stop it when it was all just a big lie. And accounting fraud is very, very common. It can happen in almost any businesses. You just have to be really, really careful because accounting fraud is just such a minute thing. You can change a couple numbers and make it seem like your company is flourishing. Enron went down the drain because of accounting fraud, and the fall of Enron had caused major damages to people losing jobs and money, but it also had positive effects too, because it made other businesses, it made it harder to commit accounting fraud today, because the all the acts and board of directors and all those major companies that came out of this. And there's my citations. Thank you. Hope you learned more about accounting fraud and how accounting fraud played a major role in the fall of Enron.